Follow the money, a saying that I have used in the early days of my investing career that has led to outsized returns in my portfolio, largely related to trend investing, has nothing to do with value investing or valuations at all. Because today we're talking about hedge funds, more particularly what is called CPP, the Canadian Pension Plan, which every time a Canadian gets a paycheck, they have to put a percentage into this for their retirement. And today we're talking about the over $500 billion the Canadian Pension Plan is investing in equities, because there's one sector where they are offloading a large amount of capital right now, where we are starting to see outsized returns. And it has a lot to do with the renewable sector in this geopolitical environment where energy is getting out of control. If this is a conversation you appreciate, in return, I simply ask that you hit that like button, because before we look at what this large fund is holding and investing into, I primarily want to start in the renewable sector with some individual stocks. No, this is not financial advice, folks, but this is very intriguing, and I just want to dive right into this, starting off with Enphase. This is a Meet Kevin favorite, and from the lows right now is trading up 30%. And you're going to notice something very similar amongst all of these stocks. They have been downtrending since roughly their 2021 highs, kind of getting into that steam of the pandemic, but now look like we've seen bottoms. And I'm going to bet that going into the end of the year, most of these companies are going to have outperformed the markets. One of my personal favorites, Northland Power, a monthly paying utility, guys, that is largely globally diversified into everything from natural gas to wind and solar. And this thing hit some lows. And again, keep in mind, this is the only monthly paying renewable stock that exists out there with a 3% yield. But again, same thing with Enphase, is now trading off its lows here and looks like it is continuing to pick up some steam, guys. Algonquin Power and Utility Corp. This one has a larger amount of exposure to natural gas, some water utilities and transmission lines, but also has a very large segment into wind and obviously solar. And this thing is bouncing off its bottoms with a very similar chart to all these other ones that we just looked at. Look at Brookfield Renewable Partners. And again, a lot of these being Canadian companies doing the exact same thing, maybe not getting as high as Enphase, but all bouncing off the bottom. Canadian Solar Inc., same sort of chart here, guys. What about Plug Power? A whole different sector, also doing something very similar. Now let's talk about Tesla stock real briefly here, guys. Tesla is a company where obviously where gas is getting more expensive, most people are going to be more inclined to buy electric vehicles. And I want to talk about Tesla a little specifically today, which is bouncing off its lows, but it's something really intriguing here, guys. As value investors, like Everything Money would say, why would you buy a stock that's so overvalued where it's got to make so much? Well, the question you got to ask yourself, then why is Canada's largest pension fund buying Tesla stock after selling GM, Nvidia, and GE shares? Obviously, I would say GM, Nvidia, and GE are all way at better valuations than Tesla stock. So why is the Canadian Pension Fund doing this? Well, if we go onto their website, guys, valuation doesn't come into play always with the way these funds invest. They have to go through a large checklist, something I've mentioned before. You want to buy stocks that are in favored to these funds, because honestly, Tesla did not get to $1 trillion valuation without meeting the requirements for funds like this. And basically right at the top of the website here is investing in the path to net zero. We commit our portfolio and operations to being net zero of GHG emissions across the scopes by 2050. So no matter what, every single dollar that they take off your paycheck, some of it is going to be going into some of these specific companies like Tesla. Now, just taking a look at it from the Canadian side of the border, because this fund invests globally, I found their Canadian holdings to be extremely intriguing, guys. From everything, from a lot of healthcare to Canadian natural resources, Canadian Tire being up there, Capital Power, Fusion Pharmaceuticals, a high interest savings account fund, which is intriguing. I'm curious to what the pension fund gets for high interest, maybe like 0.5% to 1%, maybe. Horizons Cash Maximizer, so we can really tell that they're looking for stability and guaranteed returns from interest, and in this interest raising environment might do them a little better. But still, guys, Intact Financial Corp, a very intriguing one. Inter Pipeline Limited, there it is right there, Northland Power, and these are all in the hundreds of shares, so this would be 1,000, so 900,000 shares in Northland Power. The Pembina Pipeline, I know a lot of you are fans of that one in here. Premium Brands Holding, Purpose High Interest Savings Account. So it's really intriguing to see how much money they have offloaded into cash into high interest savings, with a very particular investment strategy with things in pipelines, natural energy. They've even got Shopify in here, the TMX Group, which is largely related to the Toronto Stock Exchange, Whitescap Resources, and then WSP Global Inc. So I would pay close attention into where this fund is dropping a lots of capital into the Canadian side of the border. But on the US side of the border, not really the US, I would call this kind of their foreign publicly traded equities, because this goes all over the world, as we can see, from Switzerland, United States, Japan. There's Chinese stocks in here, but take a look at these 3M company, guys. These are like dividend favorites. Abbott Laboratories, AbbVie. They even have shares in Activision Blizzard, following suit with Berkshire Hathaway, and they got everything from Alibaba in here. The list goes on and on. There's literally like hundreds of companies in this list specifically, and I'm going to leave the links to this in the description below for those of you that just want to see what these large funds are doing, especially the Canadian pension plan, because this is where all your retirement money that you need to rely on when you get to retirement from the Canadian government is going to be coming from. So this is some very intriguing stuff. Let's take a look at one more here, because this is the global equities, which I found very interesting, because I was trying to see if they have any exposure to Russia in here, but it looks like they got Denmark, a lot of European exposure, real estate exposure, things of that nature. And they also have private equity, which I found very intriguing, because private equity disconnects them from the publicly traded market. So I find this very intriguing, but most of these are just public equity funds that I've noticed, from BlackRock, just a whole suite of listing. And the neat thing is the performance side of this, the sustainability of the CPP. Now, this is kind of just showing you, I guess, the underlying, the project assets versus the actual assets and value. And they've done a pretty good job at managing this. The problem is this the actual growth of the fund, or is this the including of contributions to the fund? Because by 2040, they're expecting this thing to be worth 1.68 trillion from the $500 billion that it is currently worth today. But from a performance standpoint, guys, the pension fund is probably outperforming you right now, which I find very intriguing, because they're saying they're getting an 11.7% 5-year annualized rate of return. So an 11.7%, I doubt most of you are coming close to that. That's better than most individual stockholders. That's actually quite better than sometimes the S&P 500 is, because typically I think right now over the last 5 years or something, the annualized return has been 16% out of the VOO. But this is damn impressive, in my opinion. This is very hard to achieve. So I do got to applaud the Canadian pension plan for doing quite an outsized return here over the last 5 years anyways. And I'm going to make a bet right now that because all these big funds are so heavily interested in renewables, especially with oil getting out of control, that is simply going to be a sector that outperforms. And I think the oil companies are going to continue to do well, because obviously at $100 a barrel, the margins get pretty excessive. And the fact that a lot of people are disconnecting from Russian oil means they're going to have to rely on some other oil giants that currently exist, or again, start making mass transitions and overpaying for the renewable shift today. Now, I'm not telling you to invest in these companies. I do have exposure to Northland Power and Algonquin Power, obviously, and I'm just making a bet now that because they're at extremely low bottoms here, this is probably an incredible buying opportunity. But I pass the question off to you. What do you guys think about this in that comment section below? But stay cool, stay awesome, and as always, I look forward to catching you in the next one.